how big a milestone are we talking? This has been such a long-term story, such a slow burn. We get through today and we point our way to the ending of sanctions or the gradual lifting of sanctions. Give us a sense of the kind of the economic dimension, the backdrop to this. What will that mean?
There's the first thing for the oil markets, and whether Iran can bring back on stream an extra 500,000 to 1 million barrels a day. They're targeting 1 million barrels. For investors, I think what's interesting is you've got a $400 billion economy. This is going to be the biggest and last opening up of a major economy ever. Saudi was the last one which opened up earlier this year. But after this, who's next? What, North Korea? I mean, there isn't much else. And you've got a very well-developed stock market already with a market cap of about $85 billion sitting there, which is available for foreigners to get invested in.
So how quickly can they spin it up again?
Get foreign investors coming to the market? There's going to be the issues that they've got to confront include custody issues. Where can you actually... The technicalities of trying to invest is going to be the issue, and whether or not investors feel comfortable with their custodian arrangements. If that's sorted, there's nothing to stop people putting money in late January.
That quickly? So...
and they could probably do it, you know, on the day itself, if they're prepared to... It's just the custodian risk. So at an individual level, it's probably already going to be happening straight away. At an institutional level, it'll take a bit longer.
When you open up an economy like this, kind of give us a sense of what returns look like.
Well, what interests people is the dividend yield on the stocks, which runs at about 15 to 20%.
Right.
So they had a very interesting privatisation process, and in order for people to basically repay the government for the money that they've invested in companies, they're taking a massive dividend stream out, and they have been for years. So the dividends are very interesting, and the PE we think is around 6 on a trailing basis. This is not the most transparent place to be looking at, but we think it's about 6, and we're doing the work on the forward PE at the moment. But So that looks interesting, and the fact that there's nobody else there looks interesting, and the fact that the companies are generally not differentiated. They're all just picked because they offer a dividend yield of 15 to 20%, at least from the local side. So the argument is that once foreigners start to get involved, they'll start to differentiate between good quality companies that will grow versus those that...
And what does the political trajectory look like? Once that starts to happen, it changes the operating environment from a political point of view.
I think this is going to be a really interesting few months because we've got elections at the end of February for Parliament, and up till now a huge number of people have been disqualified from competing in all the elections, but particularly the parliamentary. This is the election set at the end of February where Rouhani, the president, is expected to see reformists who back him doing much better. And if that happens, you've then got Parliament and President aligned. Still, perhaps some differences of opinion with the Supreme Leader, who's the religious top dog in the country. So there's still issues there. But on the reform side and the fact that something might be done to try and open up Iran further, these elections in February, end of February, could be really important.
David, the Iranians they want back in, and one of the areas they want back in is energy. And if they start pushing hard, the supply-demand story is out of kilter still. And you add the Iranians into that, and you wonder what the downside is on oil. We're at 40 now. It doesn't, like a $10 drop has a really meaningful impact.
Yeah, no, that's exactly right. And I think the question that you allude to is how quickly and how much we're going to get oil coming back. I mean, certainly we saw oil markets starting to price the expectation of some return coming back in. How much is priced in now is a big question. You know, the difference between 500 million and 500,000 and 1 million barrels coming out from Iran across the course of next year is a big question. But if you do start to get that downward pressure coming through, it really does change the shape of the outlook. I mean, it clearly puts some further downward pressure on some of the commodity-producing economies themselves, but it also shapes slightly the dynamic of growth coming through more after. You know, we see growth being slowed to some extent in the developed economies as oil lifts inflation coming through. But as you say, you get another sort of 25% year-on-year fall coming through, and all that smooths that oil process, that smooths that inflation rebound, keeps growth a little bit firmer.
If I could just add in, what's so interesting about this from Iran's perspective is that let's assume they can sell $500,000 to $1 million at $45, $50. That's about an extra $10 to $15 billion of oil, extra oil receipts for them. On top of that, there's about $29 billion left offshore, which has been frozen as part of the sanctions. That's expected to come back on day one in January of the sanctions easing. So that's 29, 39. We're talking nearly 40, 45 billion. If you have a little bit of extra trade finance, a little bit of portfolio flows, maybe a Eurobond, you could be talking $50 billion of new money coming to Iran in 2016. It's an extra 12% of GDP boost, and that is going to be a big deal for their economy.